Sahad Washington here, licensed mortgage loan originator 1446971. Today I want to talk to you about LLPAs. What are they? Loan level pricing adjustments. What is this? It's risk-based pricing as it pertains to your interest rate. So if you're a borrower, a current homeowner, or looking to be a future homeowner, your lender or bank is going to be pricing out your loan if it's conventional or conforming. And just to add, 50% of all loans that are originated in the United States are conventional conforming loans. So it's more than likely at one point or another in your life, you're gonna have a conventional conforming loan. So LLPAs impact your conventional conforming loans. Just like insurance follows risk-based pricing. So for example, if you have diabetes and you're trying to get a certain type of medical coverage or life insurance, you're going to pay a higher premium versus someone who doesn't potentially have diabetes. If you drive a sports car or a Lamborghini, you're going to pay higher car insurance than someone who drives a minivan. If you drive a Lamborghini and you've had a DUI, you're going to pay more insurance than someone who has a Lamborghini who didn't have a DUI, or way more than someone who had no DUI at all and they were driving a minivan. So just to get a clear understanding of risk-based pricing. As it pertains to home loans and conventional performing loans, the risk-based pricing is deemed an LLPA. That's what it's called. It is imposed by Fannie Mae and Freddie Mac. These are two semi-government agencies that fall under the direction of FHFA. That is Fair Housing Finance Agency. And if you are a buyer, first-time home buyer, you're probably never going to hear these names again, but it's important for you to know the why behind what's happening. So Fair Housing Finance Agency, FHFA, is the conservator of Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac are like brothers and sister companies, quasi-government agencies that lenders deliver their loans to. They get to set the pricing for the lenders and the banks. So the pricing is what they tell lenders, hey, if you're going to deliver a loan to us, it better come with these specific pricing hits or pricing adjusters added in, because even if you don't do it, when you deliver the loan, we're going to charge it to you anyway. So these additional fees and adjustments that Fannie Mae and Freddie assess on the lenders and the banks that give the loans, by time you see it as the borrower and you're quoted your rate, these LLPAs have already been built in to the rate that you're going to get. So that's what you're seeing on the end, but this is what's happening behind the scenes. Now, what are some things that impact an LLPA? All around risk. So there's no such thing as a one-size-fits-all mortgage program or one-size-fits-all interest rate. It's going to be based off of what you qualify for. So a single-family home that you're going to live in is going to have a different interest rate versus an investment property that you're not going to live in. A condo is not the same as a single-family home, so you may see different pricing for that. A second vacation home is not the same as a single-family residence. If you're taking equity or cash out of a property that you already own, there's a different set of pricing for that. So based on what you're trying to do with the type of property that you're trying to do it with what you qualify for as far as your income, assets, and credit, that's all going to determine what your pricing is going to be and what LLPAs are going to impact you for your transaction. So hopefully that breaks it down where you can understand what is happening. Even if you're seeing headlines that are saying, oh, LLPAs, that doesn't mean anything to you. It doesn't. And that's okay. But at least you know what it is, where it's coming from. It is risk-based pricing. There's risk-based pricing all around us. It impacts everyone differently. So now you have some information and a high level understanding of what is an LLPA.